Yo, 365, man, shake my hand one more time. Well, one more time, if you watched my video this morning in the public Telegram group, then yeah, shake my hand one more time. But if it's your first time, good evening, everybody. Welcome to a different type of video on the channel, an important type of video on the channel. I'm just quickly getting started, setting up. We're about 2 minutes late, 3 minutes late. I do apologize. I want to make sure I send this link to the public Telegram group just to let them know that we are live. We're still babysitting people, just to make sure they're live. And then we're going to be watching principles of dealing with a change in world order, right? By Ray Dalio, man. It's my first time having a look at it. You can see I haven't watched this video. I just know Ray dropped something a while back. One of my senior traders alerted me. Fundamentally, I forced them, was it a while back last year, just to kind of like get involved in Ray's world of macro analysis, right? And so in the Senior Trading Academy last year, we're pretty much studying, we do things differently in the Senior Traders group, but, one day some of you will see it, I guess. And we're really looking at a couple of things around macro analysis and debt crisis at the time as a reflection of what was going on with COVID, etc., etc. Right. So in this video, I'm going to literally just sit through Ray Dalio's take on the principles of dealing with the change in world order. Right. It seems to be about 43 minutes. I'm going to watch all of it. I'm going to ask you to watch all of it with me. If there are things that he will say or drop in between, I'm going to assume, that might need clarity of some sorts. Then I'll definitely give that clarity. I'll pause the video, just quickly explain a couple of things, and then move on to the next bit. At the end of this thing, I'm going to then break down, if there's anything I think he left out, my take, or more importantly, what I believe I need to do in my own personal life, but more important, what I'm telling corporates that invest with us, what they should be doing to prepare for the lost decade. The lost decade thesis, I started talking about this in 2018. But fundamentally, the lost decade looks into about 2020 to 2030, right? Changing a new world order. But yeah, I'm quickly gonna immediately do the right thing and like this video because I know it's gonna be good. Ray Dalio is just amazing. And subscribe to his channel. I mean, I read his books. I haven't had a chance to actually sit in. I never get a chance to watch videos, so it's good, right? You'll let me know if the audio is terrible. You'll let me know if you can hear me. You'll let me know if you can't hear me. But let's get cracking. Sorry, guys. Just real quick. I see my internet is lagging a little bit. I do apologize for that. Just so we're clear, in case you've never heard this name, Ray Dalio. If you don't know why, why this man is so important. I don't want you to zone out and just think it's just another YouTube video. I'll not just play a random YouTube video. Ray Dalio is, is an epitome of the direction I want to take the 365 trading floor. Right? He is currently worth about 22 billion US dollars. That's not my dream. It's not to be one of the wealthiest people in the world, but the work that his investment company does is incredible. He is the CEO of the largest hedge fund in the world. Now, if you know 365, our goal, our job, what we want to do is to trade like smart money, is to trade like financial institutions. So when someone like Ray Dalio talks, I absolutely want to listen. I don't know everything. I am a student to the markets, and these are the type of people I've spent the last, not 9 years, the last 5 years of my 9 years in trading, learning from. I've read all his books. One of his books is about almost 1,200 pages, where he laments this debt crisis. It's absolutely crucial. You literally take Ray Dalio seriously. You know, I'll take this video seriously. Now, I don't know what he's about to say, but I'm absolutely sure that it is probably a good idea we listen to him, right? So if you want to Google, you know, the hedge fund, it's called Bridgewater Associates, something like that. And, you know, he's been running it since 1985. Right, the top hedge fund in the world since 1985, unmatched, unbeaten. Right, Ray Dalio has a tendency of calling long-term beautiful investments in the Chinese stock market, American stock market, long before the whole world sees the opportunity. Right, there's something about this man. He started his finance career, if I remember his autobiography, or at least the books I read, at the age of 12. All right, he started he's well educated. All right, so it's not like, you know, it just came by magic. He's a student of markets. His first main jobs were at the New York Stock Exchange, and then he went on to open his hedge fund. All right, so I'm just bringing this up. Man knows what he's talking about, and he did say in the introduction of this video, if you're just joining us for only 50 seconds in, he's been doing this for about 50 years right now. Right, again, listen to him. Get the book. If you want a copy of that book, no sound from the video. Mic check, mic check. Someone is saying there's no sound. Is that correct? Let me know, please. Someone is saying there's no sound. Is that correct? Hello, you can mic check. Can you guys hear me? Can you guys hear me? Please, can you guys hear me? What? You can't hear me? You guys can hear me, but you can't hear the video. Is that the case for everyone? Mrs. Mtunzi, could you hear the video? Oh, okay. That's terrible. That's terrible, gang. All right, I apologize. I apologize. Well, I'm glad you could hear me. I'm just trying to see what I can do. You know, streaming is normal. Streaming is not okay. Just can we just quickly all do a mic check? Can you guys hear the video now? Can you hear that?
In 1971, when I was a young clerk on the floor of the New York Stock Exchange, the United States ran out of money and defaulted on its debts. That's right, the U.S.
Sorry, guys, I just need, yeah, but you guys can hear it now. All right, so I won't be clear because I've removed the mic. All right, I won't be clear because I've removed the mic. But what I'm gonna do is, unfortunately, we're gonna have to just start the whole thing. All right, so I won't be as clear as I was before, and then we'll just start again. It's only the first minute. It's only the first minute.
The changing world order. The times ahead will be radically different from those that we've experienced in our lifetimes, though similar to many times before. How do I know that? Because they always have been. Over my roughly 50 years of global macroeconomic investing, I've learned the hard way that the most important events that surprised me did so because they never happened in my lifetime. These painful surprises led me to study the last 500 years of history for similar situations, where I saw that they had indeed happened many times before, with the ups and the downs of the Dutch, British, and U.S. empires. And every time they did, it was a sign of the changing world order. This study taught me valuable lessons that I'm going to pass along to you here in a distilled form. You can find the comprehensive version in my book, Principles for Dealing with the Changing World Order. Let me begin with the story that brought me to this point, about how I learned to anticipate the future by studying the past. In 1971, when I was a young clerk on the floor of the New York Stock Exchange, the United States ran out of money and defaulted on its debts. That's right, the U.S. ran out of money. How? Well, back then, gold was the money used in transactions between countries. Paper money, like the dollar, was like checks in a checkbook, in that it had no value other than it could be exchanged for gold, which was the real money. At the time, the United States was spending a lot more money than it was earning by writing a lot more of these paper money checks than it had gold in the bank to exchange for them. As people turned these checks into the bank for gold money, the amount of gold in the U.S. started to dwindle. It soon became obvious that the U.S. couldn't keep its promises for all the existing paper money, so people holding dollars rushed to exchange them before the gold ran out. Recognizing that the U.S. was going to run out of real money, on Sunday evening, August 15th, President Nixon went on television to tell the world that the U.S. was breaking its promise to let people exchange their dollars for gold. Of course, he didn't say it that way. He said it more diplomatically, without making it clear that the United States was defaulting.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
I watched in awe, realizing that money as we understood it was ending. What a crisis. I expected the stock market to plunge the next day, so I got on the exchange floor early to prepare. When the opening bell rang, pandemonium broke out, but not the kind I expected. The market was up, way up, and went on to rise nearly 25%. That surprised me, because I never experienced a currency devaluation before. When I dug into history, I discovered that the exact same thing happened in 1933 and had the exact same effect. Then, paper dollars were also linked to gold, which the U.S. was running out of because it was spending more paper money checks than it had gold to exchange for them. And President Roosevelt announced on the radio that he would break the country's promise to exchange dollars for gold.
It was then that I issued the proclamation providing for the national bank holiday. And this was the first step in the government's reconstruction of our financial and economic fabric. The second step, last Thursday, was the legislation promptly and patriotically passed by the Congress, confirming my proclamation and broadening my powers so that it became possible, in view of the requirement of time, to extend the holiday and lift the that holiday gradually in the days to come. This law also gave authority to develop a program.
In both cases, breaking the link to gold allowed the U.S. to continue spending more than it earned,
Printing money
by printing more paper dollars. Since there was an increase in the number of dollars without an increase in the country's wealth, the value of each dollar fell. As these new dollars entered the market, without a corresponding increase in productivity, they went to buy lots of stocks, gold, and commodities, and hence caused their prices to rise. As I studied more...
Sorry guys, so like I said, I'm going to interject just briefly, every now and again. So I want you to go back to your charts after this, maybe write this down and see how the stock market's rallied. Again, you should know these dates by now. March of 2020, Bitcoin stocks, right? I see how the markets rallied, the V-shaped recovery in 2008. So while the whole world is still going crazy, whether it's the 2008 crisis, the COVID crisis, see how markets rallied from the 14th of March this year, 2022, in the middle of a war, right? As long as QE is at play, I mean, this year is slightly different. We'll talk about that, at some point, why it's slightly different. But as long as QE is at play, okay, or some type of government stimulus, there's always a miscorrelation with logic. The logic is markets are going to fall forever, right? And all of a sudden, there's a buy-in. And what Ray is saying is, this is not new. It happened in 2022. It happened in 2020. It happened in 2008. But it also happened in 1973, 1960. And if you read the book, this is from his book, by the way. If you read his whole book, it goes 500 years back, where governments logically make a silly short-term decision. Short-term could be 10 years, but it's got a fundamental long-term impact, right? And most of you who joined 365 last year have been trading in these conditions, right? If you started buying Bitcoin in 2020, you've been investing in these conditions, right? In the shift of money. And I want you to understand why, all right?
History, I saw that the exact same thing happened many, many times before. I saw that since the beginning of time, when governments spent much more than they took in taxes and conditions got bad, they ran out of money and they needed more. So they printed more, not more, which made its value fall and made the prices of most everything, including stocks, gold, and commodities, rise. That's when I first learned the principle that when central banks print a lot of money to relieve a crisis, buy stocks, gold, and commodities, because their value will rise and the value of paper money will fall. This printing of money is also what happened in 2008 to relieve the mortgage-driven debt crisis, and in 2020 to relieve the pandemic-driven economic crisis.
Well, there you go.
And it almost certainly will happen in the future. So I suggest that you keep this principle in mind. These experiences gave me another principle, which is to understand what is coming at you. You need to understand what happened before you. That principle led me to study how the Roaring '20s bubble turned into the 1930s depression, which gave me the lessons that allowed me to anticipate and profit from the 2007 bubble, turning into the 2008 bust.
Sorry, because he's moving across these examples real quick. Once again, I just don't want you to miss it, man. In the 1930s, there's something called the Great Depression. It's a terrible, terrible depression. It's recession, the worst type. 2008 is like a baby, compared to the Great Depression. Every time before a great recession or a great depression happens, there is a decade, a 10-year decade before that, where things are crazy good, right? So in the academy, we always teach people, always see the 3 months perspective of banks, 1 year profit in a 10-year plan. Now, before the 1930s Great Depression was what we thought back then was the capitalism's golden age in the 1920s, before World War. So World War started in 1918. So between 1910 to about 1920, things are beautiful globally, especially in the West. but you know it affects the whole world. 1930s, right in the middle of the Second World War, it's terrible, literally terrible for everyone. And the cycle, this massive rise and massive boom, you know, continues throughout, right? And that's kind of like what he's narrating.
All these experiences led me to develop an almost instinctual urge to look to the past for similar situations, to learn how to handle the future well. Changing orders. Over the last few years, three big things that hadn't happened in my lifetime prompted me to do this study. First, countries didn't have enough money to pay their debts, even after lowering interest rates to zero. So their central banks began printing lots of money to do so. Second, big internal conflicts emerged due to growing gaps in wealth and values. This showed up in political populism and polarization between the left, who want to redistribute wealth, and the right, who want to defend those holding the wealth. And third, increasing external conflict between a rising great power and the leading great power, as is now happening with China and the United States. So I looked back. I saw that all these had happened together before.
My goodness.
And nearly always led to changing domestic and world orders. The last time this sequence happened was from 1930 to 1945. What exactly is an order, you might ask? It's a governing system for people dealing with each other. There are internal orders for governing within countries, typically laid out in constitutions. And there is a world order for governing between countries, typically laid out in treaties. Internal orders change at different times than world orders, though whether within or between countries, these orders typically change after wars. Civil wars within countries, international wars between countries.
Like now,
they happen when revolutionary new forces defeat weak old orders. For example, the U.S. Internal Order was laid out in the Constitution in 1789 after the American Revolution, and it is still operating today, even after the American Civil War. Russia got rid of its old order and established a new one with the Russian Revolution in 1917, which ended in 1991 with a relatively bloodless revolution. China began its current internal order in 1949 when the Chinese Communist Party won the Civil War. You get the idea. The current world order, commonly called the American World Order, formed after the Allied victory in World War II when the U.S. emerged as the dominant world power. It was set out in agreements and treaties for how global governance and monetary systems work. In 1944, the New World Monetary System was laid out in the Bretton Woods Agreement and established the dollar as the world's leading reserve currency. A reserve currency is a currency that is commonly accepted around the world, and having one is a key factor in a country becoming the richest and most powerful empire. With a new dominant power and monetary system established, a new world order begins. These changes take place in a timeless and universal cycle that I call the Big Cycle. I'll start with a quick overview, then give you a more complete version, and then direct you to my book if you want more. As I studied the 10 most powerful empires over the last 500 years and the last 3 reserve currencies, it took me through the rise and decline of the Dutch Empire and the guilder, the British Empire and the pound, the rise and early decline in the United States Empire and the dollar, and the decline and rise of the Chinese Empire and its currency, as well as the rise and decline of the Spanish, German, French, Indian, Japanese, Russian, and Ottoman empires, along with their significant conflicts, as measured in this chart. To understand China's patterns better, I also studied the rise and fall of Chinese dynasties and their monies back to the year 600. Because looking at all these measures at once can be confusing, I'll focus on the four most important ones: the Dutch, British, US, and Chinese. You'll quickly notice the pattern. Now let's simplify the form a bit. As you can see, they transpired in overlapping cycles that lasted about 250 years.
The big cycle.
10 to 20-year transition periods between them. Typically, these transitions have been periods of great conflict because leading powers don't decline without a fight. So how am I measuring an empire's power? In this study, I used 8 metrics. Each country's measure of total power is derived by averaging them together. They are education, inventiveness and technology development, competitiveness in global markets, economic output, share of world trade, military strength, the power of their financial center for capital markets, and the strength of their currency as a reserve currency. Because these powers are measurable, we can see how strong each country is now, was in the past, and whether they're rising or declining. By examining the sequences from many countries, we can see how a typical cycle transpires. And because the wiggles can be confusing, we can simplify it a bit to focus on the...
Sorry guys, in case you're wondering, this is actually what real, not the stuff on social media, this is what real fundamental macro investor analysis looks like, right? And you gotta fall in love with this stuff. It's not for everyone. I mean, this is so well done. If you read his book, the data in there is so well put together. But this is macro. Macro means big picture. So you think about how difficult it is to swing trade for 3 weeks, holding a trade for swing weeks. This guy is running a multi-billion hedge fund. If you invest with him, there's a criteria how much money you can even start with. And if you invest with him, you know you're looking at becoming extremely wealthy in the long run, but you're playing the long game. You're playing the long game. I'll definitely take care of that, Trevor, right? So just this macro fundamental analysis, okay?
Pattern of cause-effect relationships that drive the rise and decline of a typical empire. As you can see, better education typically leads to increased innovation and technology development, and with a lag, the establishment of the currency as a reserve currency. You can also see that these forces then decline in a similar order, reinforcing each other's decline. Let's now look at the typical sequence of events going on inside a country that produces these rises and declines. In a nutshell, the big cycle typically begins after a major conflict, often a war, establishes the new leading power and the new world order. Because no one wants to challenge this power, a period of peace and prosperity typically follows. As people get used to this peace and prosperity, they increasingly bet on it continuing. They borrow money to do that, which eventually leads to a financial bubble. The empire's share of trade grows, and when most transactions are conducted in its currency, it becomes a reserve currency, which leads to even more money. At the same time, this increased prosperity distributes wealth unevenly. So the wealth gap typically grows between the rich haves and the poor have-nots. Eventually, the financial bubble bursts, which leads to the printing of money and increased internal conflict between the rich and the poor, which leads to some form of revolution to redistribute wealth. This can happen peacefully or as a civil war. While the empire struggles with this internal conflict, its power diminishes relative to external rival powers on the rise. When a new rising power gets strong enough to compete with the dominant power that is having domestic breakdowns, external conflicts, most typically wars, take place. Out of these internal and external wars come new winners and losers. Then the winners get together to create the new world order, and the cycle begins again. As I looked back, I saw that these cause and effect relationships drove the cycles of rises and declines all the way back to the Roman Empire. I saw how the stories of each one of these cycles blended together with others before, during, and after, in the same way as each individual story blends with others to make the epic 500-year story that is our collective history. And like human life cycles, no two are exactly the same, but most are similar. They're driven by logical cause and effect relationships that progress through stages from birth to strength and maturity to weakness and inevitably decline. However, that's like saying a person's life cycle takes 80 years on average, without recognizing that many are much shorter and many are longer. While age can be a good indicator of future longevity, a better way is to look at health indicators. One can do that with empires and their vital signs too. I found that by watching the indicators of power change, I was able to see what stage a country was in, which helped me to anticipate what was likely to come next. Now, I'll take you through the big cycle in more detail. Give me 20 minutes and I'll give you the last 500 years of history and show you the similar patterns across the Dutch, British, US, and Chinese empires. 500 years of big cycles. I'm going to describe the typical cycle by dividing it into three phases: the rise, the top, and the decline. The rise. Successful new orders that rise, both internal and external, are typically started by powerful revolutionary leaders doing four things. First, they win power by gaining more support than the opposition. Second, they consolidate power by converting, weakening, or eliminating the opposition so they don't stand in their way. Third, they establish systems and institutions that make the country work well. And fourth, they pick their successors well, or create systems that do that. Because a great empire requires many great leaders over several generations. At this stage, soon after winning the fight, there is typically a period of peace and growing prosperity because the leadership is clearly dominant and has broad support, so no one wants to fight it. During this phase, leaders within the country have to design an excellent system to raise the country's wealth and power. First and foremost, to be great, they must have strong education, which is not just teaching knowledge and skills, but also strong character, civility, and work ethic. These are typically taught in the family, schools, and religious institutions. That provides a healthy respect for rules and laws, order within society, low corruption, and enables them to unite behind a common purpose and work well together. As they do this, they increasingly shift from producing basic products to innovating and inventing new technologies. For example, the Dutch rose to defeat the Habsburg Empire and become superbly educated. They became so inventive that they came up with a quarter of all major inventions in the world, the most important of which was the invention of ships that could travel around the world to collect great riches, and the invention of capitalism, as we know it today, to finance those voyages. They, like all leading empires, enhanced their thinking by being open to the best thinking in the world. As a result, the people in the country become more productive and more competitive in world markets, which shows up in their growing economic output and rising share of world trade. You can see this happening now as the US and China are roughly comparable in both their economic outputs and their shares of world trade. As countries trade more globally, they must protect their trade routes and their foreign interests from attack, so they develop great military strength. If done well, this virtuous cycle leads to strong income growth, which can be used to finance investments in education, infrastructure, and research and development. They must also develop systems to incentivize and empower those that have the ability to make or take wealth. In all of these cases, the most successful empires used a capitalist approach to develop productive entrepreneurs. Even China, which is run by the Chinese Communist Party, used a form of this capitalist approach. Deng Xiaoping, when asked about this, said, "It doesn't matter if it's a white cat or a black cat, as long as it catches mice. And it's glorious to be rich." To do this well, they must develop their capital markets. Most importantly, their lending, bond, and stock markets. That allows people to convert their savings into investments to fund invention and development and share in the successes of those who make great things happen. The Dutch created the first publicly listed company, the Dutch East India Company, and the first stock market to fund it, which were integral parts of the system that produced massive wealth and power. As a natural consequence, the greatest empires developed the world's leading financial centers for attracting and distributing the world's capital. Amsterdam was the world's financial center when the Dutch were preeminent. London, when the British were on top. New York is now, and China is quickly developing its financial centers. Most importantly, the capitalists, the governments, and the military must work together. Not only did the Dutch work well together, they were one and the same. The Dutch East India Company was granted a trade monopoly from the government and had its own officially sanctioned military to go out into the global markets to make and take wealth. The British followed with the British East India Company and had a similar coordination of their government, business, and military operations. The U.S. military-industrial complex followed suit, as does the Chinese system today. As the country becomes the largest international trading empire, its transactions can be paid with its currency, making it the preferred global medium of exchange. And because their currency is so widely accepted and frequently used, people around the world want to save in it, making it the preferred storehold of wealth, and thus lent back their currency to the empire. Countries without a reserve currency don't have that. And when the empire runs out of its own money, remember the United States in 1971?
You guys hear me? Can you guys hear me? Can you guys hear me? I just paused. It's back. All right, cool, cool, cool.
They can always print more. The exorbitant privilege afforded by the empire's reserve currency leads borrowing to increase and the beginning of a financial bubble. This series of cause and effect relationships leading to mutually supportive financial, political, and military powers, bolstered by the borrowing power of a reserve currency, currency have gone together since history began to be recorded. All the empires that became the most powerful in the world followed this path to the top. While in the top phase, most of these strengths are sustained, embedded within the fruits of their success are the seeds of their decline. As a rule, as people in these rich and powerful countries earn more, that makes them more expensive and less competitive relative to people in other countries who are willing to work for less. At the same time, people in other countries naturally copy the methods and technologies of the leading power, which further reduces the leading power's competitiveness. For example, British shipbuilders had less expensive workers than Dutch shipbuilders. So they hired Dutch designers to design better ships that were built by less expensive British workers, making them more competitive, which led the British to rise and the Dutch to decline. Also, as people become richer, they tend not to work as hard. They enjoy more leisure, pursue the finer and less productive things in life, and at the extreme become decadent. Values change from generation to generation during the rise to the top, from those who had to fight to achieve wealth and power to those who inherited it. They're less battle-hardened, steeped in luxuries, and accustomed to the easy life, which makes them more vulnerable to challenges. The golden era of the Dutch Empire and the Victorian era of the British Empire were such high prosperity periods like this. As people get used to doing well, they increasingly bet on the good times continuing and borrow money to do that, which grows into financial bubbles. Naturally, the financial gains come unevenly, so the wealth gap grows. Wealth gaps are self-reinforcing because rich people use their greater resources to reinforce their powers. For example, they give greater privileges to their children, like better education, and they influence the political system to their advantage. This causes the gaps in values, politics, and opportunities to grow between the rich haves and the poor have-nots. Those who are less well off feel the system is unfair, so resentments grow. But as long as the living standards of most people are still rising, these gaps and resentments don't boil over into conflict. Having the world's reserve currency inevitably leads to borrowing excessively and contributes to the country building up large debts with foreign lenders. While this boosts spending power over the short term, it weakens the country's financial health and weakens the currency over the long term. In other words, when borrowing and spending are strong, the empire appears very strong, but its finances are in fact being weakened. The borrowing sustains the country's power beyond its fundamentals by financing both domestic overconsumption and international military conflicts required to maintain the empire. Inevitably, the cost of maintaining and defending the empire becomes greater than the revenue it brings in, so having an empire becomes unprofitable. For example, the Dutch Empire overextended around the world and fought war after increasingly expensive war with the British and other European powers to protect its territory and trade routes. The British Empire similarly became massive, bureaucratic, and lost its competitive advantages as rival powers, particularly Germany, soared, leading to an increasingly expensive arms race and World War. The U.S. has spent about $8 trillion on foreign wars and their consequences since September 11, and trillions more for other military operations and for support of military bases in 70 countries. And it still isn't spending enough to support its military competition with China in the area around China. In this cycle, the richer countries eventually get deeper into debt by borrowing from poorer countries that save more. It's one of the early signs of a wealth and power shift. This started in the United States in the 1980s, when it had a per capita income 40 times that of China's, and started borrowing from Chinese who wanted to save in dollars because the dollar was the world's reserve currency. Similarly, the British borrowed a lot of money from its much poorer colonies, and the Dutch did the same at their time. If the empire begins to run out of new lenders, those holding their currency begin to look to sell and get out rather than to buy, save, lend, and get in. And the strength of the empire begins to decline. The decline comes from internal economic weakness together with internal fighting or costly external fighting, or both. Typically, the decline comes gradually and then very suddenly. When debts become very large and there is an economic downturn and the empire can no longer borrow the money necessary to repay its debts, the financial bubble bursts. This creates great domestic hardships and forces the country to choose between defaulting on its debts or printing a lot of new money. It always chooses to print a lot of new money, at first gradually and eventually massively. That devalues the currency and raises inflation. For the Dutch, this was the financial crisis brought about by financial excesses and paying for the Fourth Anglo-Dutch War. Similarly, for the British, it was paying for its financial excesses and its debts from the two world wars. And for the U.S., it's been 3 cycles of debt finance booms and busts since the 90s, with the central bank stepping in each time with stronger measures. When the government has problems funding itself, when there are bad economic conditions, and living standards for most people are declining, and there are large wealth, values, and political gaps, internal conflict between the rich and the poor, as well as different ethnic, religious, and racial groups, greatly increases. This leads to political extremism that shows up as populism of the left or the right. Those of the left seek to redistribute the wealth, while those of the right seek to maintain the wealth in the hands of the rich. Typically, during such times, taxes on the rich rise, and when the rich fear their wealth and well-being will be taken away, they move to places, assets, and currencies they feel safer in.
Safe
These
havens.
outflows reduce the empire's tax revenue, which leads to a classic, self-reinforcing, hollowing out process. When the flight of wealth gets bad enough, governments outlaw. Those seeking to get out begin to panic. These turbulent conditions undermine productivity, which shrinks the economic pie and causes more conflict about how to divide the shrinking resources. Populist leaders emerge from both sides and pledge to take control and bring about order. That's when democracy is most challenged because it fails to control the anarchy, and it is when the move to a strong populist leader who will bring order to the chaos is most likely. As conflict within the country escalates, it leads to some form of revolution or civil war to redistribute wealth and force the necessary big changes. This can be peaceful and maintain the existing order, but it's more often violent and changes the order. For example, the Roosevelt Revolution to redistribute wealth was relatively peaceful and maintained the existing internal order, while the French Revolution, the Russian Revolution, and the Chinese Revolution were much more violent and led to new internal orders. This internal conflict makes the empire weak and vulnerable to rising external rivals who, seeing this domestic weakness, are more inclined to mount a challenge. This raises the risk of great international conflict, especially if the rival has built up a comparable military. defending oneself and one's empire against rivals requires great military spending, which has to occur as domestic economic conditions are deteriorating and the empire can least afford it. Since there is no viable system for peacefully adjudicating international disputes, these conflicts are typically resolved through tests of power. As bolder challenges are made, the leading empire is faced with the difficult choice of fighting or retreating. Fighting and losing is the worst outcome, but retreating is bad too, as it cedes progress to the rival and signals that the empire is weak to those countries that are considering which side to be on. Poor economic conditions cause more fighting for wealth and power, which inevitably leads to some kind of war. Wars are terribly costly. At the same time, they produce a tectonic shifts that realign the new waters to the new realities of wealth and power in the world. When those holding the reserve currency and debt of the declining empire lose faith and sell them, that marks the end of its big cycle. Of the roughly 750 currencies that existed since 1700, less than 20% now exist, and all of them have been devalued. For the Dutch, this happened after their defeat in the Fourth Anglo-Dutch War, when they weren't able to repay the massive debts they built up during it. This led to a run on the Bank of Amsterdam and a desperate sell-off, forcing massive money printing, which devalued the currency and the empire into irrelevance. For the British, this happened after World War II, when despite their victory, they could not repay the massive debts they borrowed to fund their war effort. This led to a series of money printing, devaluations, and sell-offs in the British pound, as the US and the dollar emerged dominant and created a new world order. At the time of this recording, the United States hasn't yet reached this point. While it has massive debt, spends more than it earns, and funds this deficit with more borrowing and printing huge amounts of new money, the big sell-off in dollars and dollar debt hasn't yet begun. And while there are great internal and external conflicts occurring for all the classic reasons, they've not yet crossed the line to become wars. Eventually, out of these conflicts, whether they're violent or not, come new winners who get together and restructure the losers' debts and political systems and establish the new world order. Then the old cycle and empire ends and the new one begins, and they do it all over again. That's a lot of detail I just threw at you to paint a picture of how the typical big cycle transpires. Of course, not all of them transpire in exactly this way, but most largely do. So much so that it seems like the stories of rises and declines stay essentially the same, and the only things that change are the clothes the characters wear and the technologies they use. So, where are we heading? The future. Most empires have their time in the sun and inevitably decline. Reversing a decline is difficult because that requires undoing a lot that's already been done, but it's possible. By looking at these indicators, it's pretty easy to see which stage of the big cycle an empire is in, how fit it is, and whether its condition is improving or worsening, which can help one estimate how many years it has left. Still, these estimates aren't precise, and the cycle can be extended if those in charge pay attention to their vital signs and improve them. For example, knowing that a person is 60 years old, how fit they are, whether they smoke or not, and a few other basic vital signs, one can estimate the person's longevity. One can do that with empires and their vital signs too. It won't be precise, but it will be broadly indicative and give clear direction on steps to take to increase longevity. It's most often the case that a nation's greatest war is with itself over whether or not it can make the hard decisions needed to sustain success. As for what we need to do, it comes down to just two things: earn more than we spend and treat each other well. All other things I mentioned, strong education, inventiveness, being competitive, and all the rest, are just ways of getting at these two things. It's easy to measure if we're doing it. So like people who want to get fit, let's get on the program and improve our vitals. Let's do that individually and collectively. My goal for sharing this picture of how the world works and a few principles for dealing with it well is to help you recognize where we are and the challenges we face, and to make the wise decisions needed to navigate these times well. Since there is a lot more to discuss and we are out of time, you can learn more in my book, Principles for Dealing with the Changing World Order, and I look forward to continuing this conversation at economicprinciples.org and on social media. Thank you, and may the force of evolution be with you.
Oh man, Ray Dalio, guys, shake my hand. What an incredible video. So, well, give me a second. I'm trying to switch this thing off. Listen, this has been good stuff, guys. So what I want to do now is to kind of like do some chart work with you, put a lot of these things into perspective. We can just close this actually, can we not? Thank you. Right, guys, like I said at the beginning of the video, Ray Dalio is a big fan of mine. I'm a big fan of his. He doesn't even know who I am. It's also a massive goal to one day actually sit down and meet him and interview him. I've tried twice when I was up there, visiting my mentor. It was absolutely impossible to even get an appointment as a nobody. But look, a lot of things have been said, in what Ray has broken down, and I just want to lament a couple of things. I know we've got NFP tomorrow. I know traders are, itchy and edgy and want to know what's going to happen tomorrow. Like I've got this magic box where I pull these things out, and the answer is tomorrow's NFP is going to be the first tricky NFP I have encountered in the last maybe 18 months, give or take. And that's because, there isn't a lot of clarity, right, in the markets right now, right? And I haven't been trading that much this week. I've been working behind the scenes. 7th of April, everyone should by then have access to this beautiful baby here. I did a video in the morning, so I won't be giving you guys a walkthrough. There's a video I'll post it on our YouTube channel of what the new 365 remote course is going to look like. And just to add something for 30 seconds, because I didn't bring this up, inside here, this is literally where my life's work is going to be. So far, I've just put the courses in, right? Module 1, Module 2, Module 3. They are the long-awaited Module 3. Module 4, we're going to do it together. Trading psychology, we're going to do it live together. So we're going to build Module 4 in here. So make sure you attend the live classes, right? But this is Module 3. There'll be many things in here. All my blog post ideas are going to be in here for students. Number 1. Number 2, crypto spot and future trading is going to be in here. There are so many cool things I can do on this particular platform. They've designed it exactly the way I asked for it. So much space. So this is going to be one of those things that you want to bookmark. The moment you get access to it, you want to bookmark this. It's going to be one of your most visited sites, right? It's going to be completely, run and supervised by a third party, just to ensure that you get premium and high quality services, right? So I'm very much looking forward to this, right? So I've been a bit distracted, I haven't been tracking markets, right? But maybe before we get into some market analysis, just to bring out 1 or 2 or 3 or 4 points that I was typing away, while Ray Dalio was talking, right? So Ray Dalio doesn't literally give us an indicator And guys, I'm about to plug in a microphone. I just always feel comfortable doing that. If audio disappears, please quickly let me know in the comment section. I'm sorry today, I'm a bit of a clutch with this audio thing. If audio disappears, let me know. Mic check, right? And the reason for that is I just feel much more comfortable knowing I've got a mic on me. Right now, you know, Ray spoke about a lot of things, and his conclusion was United States is not yet at that point where it's about to drop from the top. We are nearing that point, but there are a couple of things we can do. Earn more than we spend and treat each other well, which is kind of like a very typical hedge fund thing to do. No clean predictions of the market, keeping those cards close to his chest, right, for his multi-millionaire clients, which makes sense. So what I want to do now is just to explain to you a couple of things that I understand about the changing world order, number one, and also kind of like to address what I will be doing when it comes to changing world order stuff, which I think is absolutely crucial that you might want to consider doing. Not financial advice, but you might want to consider doing. All right. So, I'm not going to explain stuff in the video unless if they're like extreme direct questions so that we're not here for another hour. I just want to look at Euro USD, Pound USD, DXY when I'm talking about NFP. So I don't think I'll even be here for another 15 minutes. I know it's supper time at my house right now. Right. So if there are specific questions, please feel free to ask about the video. But I'll come back. So we did a macro analysis right now with Ray Dalio. And his span is 250 years, but he did say the internal changes move between 10 to 20 years, right? That macro gap. And he spoke about the three stages: the rise, the top, and the decline, which I think all of them speak for themselves. One big important thing that I want to quickly highlight, from his take, he also talks about it a lot in his book, is the fact that there are existing right now, undebatable, literally over 750 currencies since the 1970s, since the 1700s, so since the Dutch period. And only in today's world right now, only about 20% of those currencies exist today. Well, the countries didn't just like disappear, right? But the currencies, only less than 20% actually, to be precise, exist. And that is because currencies will always go through what we call de-evaluation. There's a strong de-evaluation period where you just have to wipe that out. And this is not something that takes hundreds of years to happen, ladies and gentlemen. It can happen in our lifetime. It is happening in our lifetime. The US dollar has devalued close to about 95%. It has lost 95% of its value over the last 20 to 30 years, right? I mean, Zimbabwe, we can't even talk about a currency. If you look at the South African rand, is struggling in general. Kenya, Mexican peso, the pula, whatever you put together at a global level, all currencies in the world are devalued. This is important. Where I'm going with this as a trader, as an investor, as a human being looking for opportunity, please don't tune out, right? You got to tune in now because this is very important. Now, with this devaluation in mind, let's say you don't care about macro analysis, you don't care about what happened in the world. What you need to start thinking about is exactly what's going on today. And I'm happy, that when Ray Dalio posted that video, I saw the date on the video was the 3rd of March, right? So a war had started, a 3rd of March, but maybe he was referring to world wars because he said right now in the world there isn't a significant war, and Ukraine and Russia started. The conflict started on the 24th of March. So Ray is on the money. The video came out this year, but this man wrote this book a long time ago. All right. And about the book, Ray Dalio's book, I pledge to buy anyone who wants the book. If you want the book, let me know. We haven't received a copyright approval to share it, with the academy. For me to share a book on the resource center, I first need to, talk to the publisher, pay a bigger amount, and then get a distributive license for free for students only. But I will buy anyone who wants the book, an e-version of the book, provided you do one thing and one thing for me. On the 365 Facebook page, today I posted a video on the course and the upgraded version of the course. I just need you to share it once. That's all. Share it once. Put whatever caption you want. Share it once, and then send me a screenshot of wherever you shared it or what you said. And then I will definitely make sure I buy you an e-version of Ray Dalio's book if you want it. It's a brilliant book. I mean, I study this man's work. You know, it's actual impeccable socio-economic science. You know, in my opinion. Right now, we've got a war going, and this war I think is so significant. I mean, we've been trading the war both intraday trading strats and swing trades, and I think our swing trades, you know, struggled a bit in this first financial quarter. Today is the last day of the first financial quarter. Yesterday I got a little bit worried because we're meeting the accounts team today, and we're going to, you know, start to talk to clients. We pay out our clients by the 3rd of April for the first financial quarter, and we did quite okay. We did quite okay because we're using alternative money. We did quite okay because we backed a third of our capital into crypto and into alts, right? We did quite okay because we're buying art and NFTs, you know. So we were smart on the money. Had we just done a pure Forex, which is what we generally are very good at in terms of swing to positional trading, with how this first financial quarter started, you know, on the 5th of April, I'll be having a very tough meeting with our corporate clients, you know. So swings did struggle. And that's because, you know, you never know when a war is going to break out, but it's always nice to see how markets reacted, and a lot of things were learned. But I want to explain to you things that I haven't brought up in any war room, and that I thought Ray Dalio was going to bring up, which he didn't in his video, which is great now, because then no one will say I'm copying Ray. I'm actually now, you know, infusing some 365 knowledge into this. Understand one thing about Russia. This is not about war. I'm not a war expert. I'm not talking to you guys about war. I'm not a geopolitical expert. No. Let's talk financial markets. Let's talk financial markets. Let's talk global economy. Let's talk about trading and investing. Russia, guys, is rich in commodities. You know, when the war started, that was all we could talk about as media. No one cared. I mean, a lot of people cared, but it wasn't the dominating conversation. The dominating conversation on every headline wasn't the loss of lives, wasn't how many soldiers are dying or children. It would get those reports, but the dominating headlines, if you go back from February till now, was about commodities, oil prices, gas prices, wheat prices, prices, right? Because Russia is wealthy in commodities. Remember what Ray was talking about? It's all about the Dutch, many years ago, right? Certain countries are blessed with certain things. Ukraine is the bread basket of Europe, right? In terms of commodity export, it's Ukraine. So when you go fight with Ukraine and you have a little perspective about what this fight is about, and you think it's about a crazy guy in Russia who's just showing off and pumping his chest, I would encourage you to go back to the drawing board and get some critical analysis going. Now, because Russia is rich in commodities, we saw this oil, gas, Germany, Europe, the world, relies on petroleum, all of this from Russia. It's an interesting war that's happening, and I want to focus on the impact of sanctions that have been thrown at Russia. But, and again, when it comes to commodities, just think as far and wide. I'm talking precious metals, gold, silver, palladium. I'm talking about platinum. I'm talking about oil, Brent oil, crude oil, everything, beef, meat, whatever it is that's affecting your life. If you go to your kitchen right now, and keep buying the same things in your kitchen right now, keep track of the things you're buying. I've got a spreadsheet for this house. My partner seems to think I'm a little bit nutty with the spreadsheets, but I do. And I literally can tell you that prices have started steadily going up in South Africa for the last 4 weeks, give or take. Steadily. And I'm sure it's the same in Botswana, Lesotho, and across the board, across the whole world. Commodity prices are going up. Now, let's go back to Russia real quick. Now, because Russia is rich in commodities, right, you have to imagine a lot of money is done through trading with other countries, right? Remember, you know, when I always tell people, Forex is not about you. It's about how countries regulate their import-export relationship. Forex is foreign exchange, right? It's all about continuous exchanges within two countries. Now, this particular exchanging, right? Russia has been doing it for years. Countries have been trading for years. There's a wallet. There's absolutely a foreign exchange reserve. That's the correct term for it. So let me just put it down here for you real quick. Foreign exchange reserve. And I really want you to think of it as a big wallet. So every single country in the world has a foreign exchange reserve, right? South Africa has a foreign exchange reserve. Inside South Africa's foreign exchange reserves will be the work that South Africa does in the mine, the platinum mines, the things that your country is so good at that it pushes out to other countries. That will be found in your country's foreign exchange reserve. I'm not talking about your currency exchange. I'm just talking about your commodity reserve, right? Now, Russia's foreign exchange wallet, I want you to understand this, is frozen. What do you mean? Who froze it? Well, everybody froze it, right? We had sanctions. I don't know if I'm spelling the word sanctions correctly. Sanctions froze it. Remember that talk earlier on about removing it from the SWIFT? Remember that talk earlier on about Biden banning, Russian war? Remember that talk earlier on about shutting down central bank in Russia, about killing not killing them literally, but taking away their assets, the billionaires, etc. Right? So the wallet, the foreign exchange wallet in Russia is frozen. They can't use it. They can't use the wealth that they've generated over and over and over in the last God knows how many years. So that starts to create an interesting problem in the markets, and I'll get to that in a second. Now, this freeze, right? The sanctions, the impact of the sanctions today, tomorrow, and for the next 10, 15 years. If you don't know how deadly sanctions can be, speak to a Zimbabwean. Zimbabweans know what the impact of sanctions. When the United States sanctioned Zimbabwe, Zimbabwe failed to get back on its feet since then. Zimbabwe was then, cataloged by the 2008 financial crisis, and it basically walked itself into an economic grave. Sanctions are absolutely brutal. It's like almost having a disease that kills you over a long span of time, right? And it's something to keep mind of. Now, like I said, if you go to your kitchen right now, if you drive a car, fuel is going up, food is going up. So all basic commodities in the world keep going up and up and up and up and up because of this imbalance, right, between real supply, right, ever continuing growing demand of these commodities, but the biggest, distributor or producer has a frozen wallet. So as these commodities go up for the rest of us, fuel, food, blah, 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 there's something interesting going on. If you follow the news, you see the Russian stock market crashing, the ruble crashing. Putin last week said everybody has to buy gas in ruble. 2 days ago he said maybe you don't have to, Germany, we'll see. Let's talk about it. So as commodities are going up, right, in value, right, or in price, as the rest of the world keeps pushing prices up, Russian commodities, Russian goods, Russian commodities are going down. Why? Well, there is no demand for them. No one wants to touch it. In fact, there is some big companies that were so impulsive, so emotional with their long-term plans that they decided to leave Russia. McDonald's was like, well, in solidarity with our government as McDonald's, we are shutting down all McDonald's branches. What did Putin do? He took over all the McDonald's, flipped the logo, and it's now been nationalized, right? So Russian stuff, commodity-wise, no one wants to touch it. It's becoming low. It's becoming sanctioned, right? You can't touch Russian goods. You can't do business with Russia. You can't take their imports, their exports, etc., etc. And so commodity prices in Russia and Russian commodities in general are dropping, right? Because remember, price only goes up if there's a restricted supply and a big demand, right? And this is pretty much our trading strategy for everything. But if there isn't a demand for that commodity, for that currency, for that asset, for that goods, right, then the price has to fall. So if no one is buying your car, you have to cheapen the price so that the market can come back and buy your car. So this is the most in my life, and I'm quite young, but historically, as a student of economic history, this is an extremely dangerous moment in markets right now, because there is something called reality, so rationalized reality in the markets, which is, if I go to a shop today in South Africa, I guess, roughly speaking, a loaf of bread is 17 rands. That's just the reality. It could be 16 something, right? It's simple. It's a rationalized reality. That is what I believe, you believe, we all believe in South Africa, at least, that the price of a loaf of bread is 17 rands. We all have to, in a way, consent to this, right? Nobody asks you to increase the price of fuel or bread. You just see it, but because it's an inelastic product, you need it in your household, you consent to it. You complain, but you pay. When you pay, you tell the market, the price hasn't reached a threshold of paying to a point where, as a father or as a human being, I can go back to my house and say, right, guy, we are no longer eating bread in this house anymore because it's too expensive, right? So markets have to mitigate around these levels. Now, if I want to explain why this is dangerous. If everywhere in the world, and let's just roughly say 17 rands is $1, although it's not, the exchange rate is about $1 is 14 rands, something, so it's closer to 15, right? So maybe to make this example awesome, let's pretend bread is 15 rands, the good old days in South Africa, or it's $1 in America, right? So it's kind of like a consensual thing. This commodity called bread is $1. In your country, in Kenya, it's $1, or the equivalent of $1. In Botswana, it's the equivalent of $1. If Jay is around in the Philippines, equivalent of $1, etc. So that's the price of the commodity. The dangerous part here is, number one, Russia is rich in commodities. Number two, is the biggest producer and one of the biggest consumers of commodities. Number three, its wallet of commodity exchange is frozen. And because of that, there is a break from reality. While everyone else's commodities globally, prices going up. In Russia, it's going down. So then you've got this weird phenomena in the markets happening right now. Well, I've taught this thing many times. If there's a gap in the markets, we call that a market inefficiency. Markets need to fill the gap. It makes no sense for you to be a gap. If you could not fill that order as smart money quick enough, markets will have to be pushed up or pushed down to fill the gaps. Markets hate inefficiency. Markets can price in negative news. Markets can price in positive news. Markets don't have a problem pricing in the bad news or the good news. Markets can't price in uncertainty, or they can, but the price is fear, all right? The price is fear or greed, one of the two. When there's market uncertainty, that's when the markets are spooked out. This is going to spook out the markets in a terrible way. Think about it. If the rational price across the world for bread is $1, except in Russia, because in Russia, nobody wants to touch the Russian commodities because of sanctions. Therefore, the pricing is different in Russia. So what I'm making this up. Let's say bread in Russia, I'm making this up to make it relative, right? There's not real prices. I haven't done the research. I don't know, right? But let's say bread in Russia is actually $7. Or, to give it like a universal term, 50 cents, right? 50 American cents. We now have a massive gap, all right? And that is absolutely dangerous, because what is more stable is this. This is the agreeable thing. It's stable. It makes sense. All of us are seeing prices go up. There's some market stability. But the difference in all of this is what's going to be the problem. Now, taking the bread example, all we are going to do is switch this up into the stock market, stocks. So let's say I like Tesla. Tesla is about to get a big drop, and Tesla is about to do a split stock. by the way, but it only affects you if you already own Tesla stocks, right? So let's say we're all looking at the Tesla stock in the world, and across the world, the Tesla stock is $900 across all brokers. Or I mean, you'll get a difference. Maybe some broker is trying to be sneaky and selling Tesla for 902, right? But it's not the end of the day, right? But across the world, across the floor traders, New York Stock Exchange, that if you want to buy a Tesla stock wherever you are, you need to pay $900, right? So that's the stable amount. That's the rational price. That's all we have in the market. What you need to watch out for is that if you are a broker in Russia, or if you're trading commodities in Russia, you now have a situation where the exchanges are desperate for buy-ins. And so what happens is the value for Tesla might not be the real value elsewhere, right? So you could be getting the stock for 700. I'm making these figures up. I'm just trying to paint a picture. The point I want you to take from here is we are going to get a massive spread difference. Now, traders and investors, this is important for you. There's going to be a massive spread difference between the bid or ask. Because what is the bid or ask? Remember, if I'm buying a cryptocurrency, if I'm buying a stock, I need to know what you're asking. What's the price there? I need to understand my supply and demand levels. I need to know that I can pay $900 for a stock, and then later on in the future get X and X amount worth for the risk I'm taking now. But if there is now a massive spread between the bid price and the ask price because of the discrepancies around the pricing of the commodity, and maybe a Tesla stock isn't a great example. A better example of commodity stocks like Coca-Cola or oil company shares. If there's these massive discrepancies, we will start to see markets are very confused. Markets won't know how to price in the values of asset classes across the board. Markets won't know. Have we seen this before? Absolutely. The 2008 crisis. I don't know how many of you really studied that, right? So the liquidity crisis, it's the home crisis, the housing crisis. I taught you guys about the Evergrande crisis last year. I told you guys that another big housing crisis is coming. But what the banks were doing, just to be clear, in 2008, they were putting together useless craps, like literally silly house deals, and giving it to people who can't even afford the silly house deals, and then selling the bonds to someone else who was dumb enough to buy them. And at the end of the day, there was a problem with pricing in these assets, and the whole market fell apart, right? So global markets, guys, are completely linked. The stuff happening to Russia is going to affect your house. I mean, I saw, we're currently dealing with the woke virus. I call it the woke virus, where everyone is trying to be woke on Facebook. Will Smith slapped so-and-so. Was it right or wrong? I don't know. I'm not trying to get into that. But you see a lot of stupid stuff on social media, all the time. And one of the most dumbest things I once saw, at the end of February, was Africans are so silly, caring about the war in Ukraine and Russia when there are always wars in Africa. And it's like, you can do both. I don't know if anyone is aware of that. You can do both. You can absolutely care for wars in Ukraine and in Africa. And I want you to know the global markets are actually interconnected. So whatever is happening in Ukraine and Russia is about to affect you at your doorstep, right? You're going to see it with the commodity prices. Now, the first thing that's going to happen is, as a trader, Forex trader, stocks trader, Nasdaq trader, whatever you're trading, you need to understand you're competing in the markets. There are these people, retail traders. We're not worried about them so much, right? Retail traders are here to provide liquidity. They always do dumb things. We call them dumb money. They lose 90% of the time. We're not worried about them. If you become a good trader, you're not worried about retail traders. You can read them. Module 3 is out. Everything is there in liquidity stuff, all of it. It's beautiful, guys. I'm really happy about my entire life's work coming together like this. So you will know this stuff, right? If you're a 365 trader, this is not who we are worried about. But because we are institutional traders on this channel, And we know who issue. We know that there are central banks. I want you to understand what's about to happen. The central banks. Then there are people like Ray Dalio. Ray Dalio is a hedge fund, and they're hedge funds. And if you see these guys, we always pin them together on our COT data reports, right? What banks are doing, what hedge funds are doing, and we wanna know how smart money is moving money, right? With our sentiment indicator on the spreadsheet, so we know if we're buying or selling, right? Students will know what I'm talking about. Now, inside of all of this is then us, also retail traders, but we are trying to use smart money concepts, right, to kind of like make sense of this world and make a profit, basically. So we want to keep track of this stuff. Now, there's a group of traders within smart money who are not us, because they would never give us the privileges of doing that. But most trading, I mean, some of you guys, I begged you last year to read The Adventures of a Currency Trader by Rob Booker, where all these principles are just thrown out. It's developed around the storyline of one individual. It's a brilliant book, but a lot of things came out, including the fact that a lot of hedge funds and private institutions love do it. If I could do it, I would do it myself. Love borrowing money from Japan, borrowing money. So it's a big thing in Ray's video, right? To trade. Because if you know what you're doing as a trader, you only know that the only thing that's stopping you is your psychology and capital. But if you're a professional trader and your psychology is fine, then all you want is a lot of money. So a lot of people always say silly things on Facebook. If Forex traders are so rich, if it's a guru, why do they do account management? Baby, the more capital I have, the more leverage I can put. The more leverage I can put, the more money I can make overnight. If I can do it all by myself with my limited capital and I know what I'm doing, I will still get rich, but it's going to take me forever. By the way, at 365, we don't do account management for individuals, right? You just throw it out. I'm just explaining it to you. But institutions borrow money day in, day out. And I'm talking in millions, in trillions. And they hunt for places where they can borrow money with low interest rates so that they don't have to pay back a lot, like Japan, which is a good place to borrow money, right? With pretty much zero interest rate. You pretty much get paid to borrow money. And then they go flip it in markets where they make 30, 40, 60% in returns. Imagine someone, just think about it this way. Imagine you take all the necessary steps for the next 2 to 3 years of your life to develop yourself as a trader, and you become proficient at it. Right, and then you create a flow trader for yourself, right? And then you have little capital, so you grow your capital. You choose 10 people. My story, I'm working out my story, by the way. 10 people, you split your capital with them, and then because you train those people, they then grow the capital, right? That's one way to become a hedge fund. It's a long process. We're in it now in our 5th year doing stuff like that, growing it from the ground, little dollar by dollar to, to 6-figure trades, whatever. But imagine you're an institution and all you are is an institution, and you're licensed and you talk the talk, you walk the walk, and you simply go to the bank and ask for $500 million and you get it. It's a loan. That's how banks are. I go to Pick and Pay to buy bread. Pick and Pay makes money because I'm buying bread. Banks make money by borrowing money. They're in the business of borrowing money. They won't borrow you money because your credit sucks. But it doesn't mean banks say no to everyone else. Banks love to borrow money. They'll borrow money for you to build a house or buy a house that you're going to pay back for the next 30 years of your life. They'll borrow you money to buy a car that you can't afford and tell you that you can make monthly payments for the rest of your life. They'll borrow you money to give you a credit card that you spend now and pay later every time at the end of the month. Banks love to borrow money. Banks make you borrow small money. All of us borrow small money so they can give big people to borrow big money and they make money. I'll teach you guys about the banking system one day. But institutions borrow loads of money. Then they take that money to the market. They trade / invest it. If I can borrow $500 million, I would take $100 million and put it into 5 crypto coins, right? So 20 million, 20 million, 20 million, 20 million, and APY or stack the living daylights out of the gains of those coins for a year, which would mean that what I make in profits in just stacking those crypto coins. I haven't done nothing, guys. All I've done is sleep and fart and eat and play with my kids. All I'm just doing is stacking, which means the markets are making money for me on my behalf, paying my interest off monthly while I keep the gross capital. Every time I pay the interest on time, the bank thinks I'm suitable. This is how the wealthy do it, by the way. Billionaires do this all the time. Billionaires create their own banks. You start a policy, you borrow from your own policy to fund. I'll teach you this. It's wild. It's wild how to make money, right? But the long story is I keep getting this cycle of money and I keep trading it if I'm good at trading, etc. Now, here's where it gets a little bit tricky. Now, because of where all this is going, where the world is right now, where we're with the commodity stuff and the borrowing, Russia being the center, being the one company that is frozen. And it's not frozen because, people don't want to touch it. People don't want to touch it because of sanctions, right? It's been sanctioned. No one can come to the rescue of the cycle. The cycle is going to get broken. Now, like I say, there's you, me, and smart money. Now, the institutions that borrow money to trade money in the markets in the millions and billions are what we call margin trading, or it's what we call margin trading. We can't do it because we're retail traders. Retail traders are never going to be given that opportunity. Margin trading is basically money borrowed for the sole purposes of trading in the markets, right? So it's very, very difficult to do it. You have to be a registered institution and have all the right connections. But lots and lots of companies, right, margin trade. They're trading off borrowed money. Well, what's the problem, you may ask? It's quite simple. Margin trading must sound like something that we're all familiar with in trading, which is called margin call. When you get margin called, your broker kicks you out because you over risk your account, right? Basically, and because you took an extra risk, you no longer have enough capital or money to cover, right, the foreseeable loss of that thing. So all your broker does is just shuts down all your positions and takes your capital and says, listen, man, you've been margin called. I am sorry. It works differently for institutions who get engaged in margin trading. When institutions get engaged in margin trading, because of the volumes, the levels, the millions. Remember, smart money moves the market, right? Not support and resistance. Smart money, small or big institutions pumping a lot of money in the market is what moves the markets. It's what gives the markets volume and life. Now, if you get margin called as an individual, your account is gone, you move on, you've blown another account. But when an institution gets margin called, for example, because of commodity crisis, which is what we're starting to see now in the world, because they were long on the wrong thing. They were betting on the dollar, and then silver went up, or whatever is going on in the world. When these guys get margin called, what happens is immediately, most of the time, it triggers a sell-off. Because once I get margin called and I get liquidated by 300 to 400 million US dollars, the market is going to notice that, and it's going to trigger a sell-off. One sell-off will trigger another sell-off. Just look at 2008, and the next sell-off will trigger another sell-off, and a couple of more sell-offs will trigger bigger margin calls. Or anyone who's been long on stocks and equities and whatever for the last 2 to 3 years, all those people who have been long, all those long game institutions, all of a sudden there's this domino effect of margin calls and sell-offs and sell-offs and sell-offs. And these are the markets we are about to start trading in. I'm not saying sell everything. I'm saying that's what a crash looks like. When you ask yourself what creates a crash, no, it's when price goes down. This is what actually creates the crash. It's this process of continuous margin calls and sell-offs from an institutional level. Now, who can stop this? The only person, ladies and gentlemen, who can stop this type of very toxic sell-off and long-term, platitude to the downside are central banks. That's the job of the FOMC, the BOJ, Bank of Japan, the Reserve Bank of Australia, Reserve Bank of New Zealand, the ECB, Euro Central Bank. The central banks, their mandate is to get a grip and control markets and say, listen, stop falling. And this is called a backstop. Man, I'm dropping some gems today, right? It's called a backstop. Now, a backstop is when central banks come into the market and do something very specific. You've seen these backstops so many times in 2020 of March, right? Across all boards, equity assets, boom, went up. COVID was still there. People were still dying. Vaccines were not even out. A backstop is when a central bank shows up like Superman and starts to buy the bottom. Starts to go, all right. We're going to give sentiment now. We're going to create a trend now. We're going to save the economy now. Here's some money. Now, where do central banks get that money? Ray Dalio told you they got to print it. They got to print the money. They got to print the money. We're going to buy, but not only we, you are going to buy too, right? So that's how the whole thing works. We are going to buy, you're going to buy. I should have put on the lights on. Sorry, I look a bit dark there in the camp, but, hope you're just hearing it and you don't care about the aesthetics, right? So all of a sudden, they print money to put into your hands, which you saw in 2020 COVID. In South Africa, it's like some grants were given out, but was that really enough? Not really, I don't know, right? But anyway, money printing gives people confidence, because all of a sudden, I used to have a salary of 2,000 rands or $2,000, but now every week I get an extra $600 from the government times 4 weeks, which means I now get an extra 2.4. Even if I lost my job because of COVID, I'm still earning more than my salary for doing no work. And if the government tells me it's going to last for a year or 2 years, I now have this untapped source of income. So what do we see people do? People start to take risks because they have money now, right? They start to pump money in Bitcoin. Look at 2020. When I tell you to buy something, I promise you, look at oil in 2020 from $1 all the way to 120. If you're holding those future contracts or just buying it on a broker, your life has changed forever. If you just subscribe to the channel, I'll always tell you the stuff for free, right? Your life could be somewhere else right now, right? So people start to take risks because they've got extra money. They start to buy Bitcoin. They start to buy stocks. They start to get into all these risky equities that give you more if you put in more. But it's not just them. The main person doing the backstop is the government. The government is buying the most because price is now at the cheapest. The problem with the 2022 outlook, in my humble opinion, is there ain't no central bank coming to backstop this current crisis, because it is the government and its central bank creating the crisis. If the crisis is COVID, a disease, guarantee it's going to happen. If it's a banker's crisis like 2008, they're going to show up for you. But if it's sanctions, then the idea is we want to punish Russia. So we can't also then come back out of nowhere now to save Russia. We can't come back and do a backstop. So we're going to get a commodity crisis first. I want you to hear me out, guys. I generally am very good with long-term trades. I am immaculately good. I'm not trying to beat my own horn, but I am growing as a macro analyst, right? And this is fundamentally important. Commodity crisis first. I feel like it's already happening. And in that commodity crisis, we're not going to get the type of backstop we're used to, because central banks can't come in and do that. Who are they saving, right? They can't change the fact that they're against Russia. So they can't all of a sudden show up and save Russian commodities, right? So that's why this Russian stock market lost over $500 billion US, in a day or 2 days, and no one did nothing. Everybody, you've never heard that. You never saw US lose $500 billion in the stock market during COVID. You just heard that the market fell about 20% and it recovered, 26% in COVID and it recovered. Market fell about 22, 24% this year. It's recovering now, right? Value-based demands have been formed now, right? For there was no recovery for that particular central bank. Because of that, all commodities that we are paying for right now are going to suffer, which means if commodities suffer and we get a commodity crisis, I'm running out of time, CC, commodity crisis, we are going to get the inevitable devil that I've been teaching you guys about, called inflation. One day we'll talk about stagflation on the channel, but right now let's stick to inflation. When we get inflation, we're going to see high prices, right? High prices will make sure the cycle continues, right? And the only thing that central banks can do in their individual countries, like South Africa last week, increase their interest rate. ECB and even the pound about a week and a half ago started to increase their interest rate. And all of these things are starting to go on. which means slowly but surely, if I'm listening to Ray Dalio correctly, the change in world order, even though he said his own words, America is not yet there, it's currently at the top, it's the dominating thing. I want you to know my long-term thesis is there's going to be a new change in world order and China is coming at the top. Remember, when there's a new change of world order, whoever is at the top literally changes everything to benefit them, right? You told us about the 3 stages: the rise, the top, the decline, and the span of how long that it takes. And it's my humble opinion, based on Russia's relationship with China, the commodity crisis, the only partner is going to be buying these things. There is no ways China won't be the one to benefit from this. But how? If everything is falling and there can't be a backstop, I believe we're going to slowly start to see China. Because remember, the Chinese stock market is beaten down. I'm like plotting all the dots here, guys. The Chinese market is terribly beaten down. I believe very soon, in the next few weeks to months to come, China is going to start being a little bit more aggressive with printing money. That's going to be the first sign. Remember, when you print money, you get short-term confidence, you bolster your stocks, you put money in people's pockets, and you boom, you explode, you become an economic giant because you've got all this fluid money. The problem is that link between what is backing the money. But in the short term to long term, China is going to benefit from all of this. And when you print money, you're doing so because you want to buy everything. You want to own everything at the absolute bottom. The last thing that Ray Dalio didn't touch on, which is very typical for an old school, hedge fund manager, which I want to add to you, which makes this whole video a little bit different from his, is the role of crypto. If all financial crises were built behind the separation of the dollar and the real commodity, which I'm sure all of you saw, the real commodity is gold. If I was Russia, and just to bring this up as well, the founder of Ethereum, which will outperform Bitcoin in my lifetime, is from Russia. The founder of Ethereum is a very nice guy, such a humble kid, very libertarian, not after money, wanting to change the world, has had 3 big meetings with the central bank in Russia. Russia is big on that whole, Mother Russia first. Now, if I was Russia, and I'm not Russia, but if I was Russia and I understood what Ray Dalio was saying, I understood the predicament that I'm in, and I'm Russia, and I know that there's a change in world order, I know there's a commodity crisis coming, and I'm in the middle of a war right now, I would want to freeze my money in a different way. I wouldn't want to freeze my money in the way they've already frozen my wallet, the wallet we spoke about. I would want to freeze my money in something that can back money up, but that can't be manipulated like Bitcoin. That's what I would do. That's what the top 5% of people are doing in the world. Ladies and gentlemen, the supply of Bitcoin is running out. We are literally now debating if the 4-year cycle of Bitcoin will continue. I don't know if you guys even know about the 4-year cycle. There's a big video I did on Bitcoin. It will drop soon. I want to make sure it's perfect. Please, my things take time because everything of mine is well researched. But there's a 4-year cycle. Just go to your charts and look at the beginning of Bitcoin and count every 4 years and see it for yourself. See, we are lagging behind in the current new 4-year cycle. And that's because Bitcoin is about to get into an interesting phase. My prayer since October last year was for this damn thing to crash at least all the way down to 20K. But I really wanted 12.5K, to be honest with you, before all these things were put together. So I didn't even issue out a Wealthy in 3 Years financial notes in November because I was anticipating a crash. In December, I didn't issue out a Wealthy in 3 Year financial note because I was anticipating a crash. And we were right. I mean, some people are like, the financial notes take some time. They do because they're a reflection of when I'm investing, right? I don't want to just make calls for fun. I make calls when I put money on the line. Imagine had I told people to invest in crypto markets in November, December, and January of this year and February during the bear market. Most of your portfolios would have been down negative 60%, and you'd have thought, we don't know what we're doing, right? It's incredible if you really look back at why it's now time. So the those of you who don't know about what in 3 years, we're about to make a big move right now. But if I was Russia, if I was an individual who believed in eating avocados, drinking water, eating bananas, and because of that, I project, if I look left and right on the road and take my vaccines, I might be alive for the next 10 to 20 years. I would be looking at alternative money, because once the dollar or other currencies separate from commodities backing them up, or if there's a surplus of printing and there's a de-link out of that, that currency always loses value. The assets lose value. The economy loses value. The only thing where money will be made is in assets where I can freeze my money as it accumulates in value. And I have a feeling, I have a sneaky feeling that during the swift discussions and removing Russia from mainstream, how crypto all of a sudden became the way. I have an interesting feeling, the fact that Ripple, XRP won the case. I told you guys to buy this stuff a long time ago. You know, the road is clear right now. I have an interesting take on a lot of things. But the bigger point is how Russia is thinking around this thing and how you should be thinking around this thing, to me, seems to be the same. Bitcoin and Ethereum. And here, if you never join the Wealth in 3 Years program, which would be such a shame because you're going to miss out on a lot of things. Actually, in honor of the 365 birthday, the Wealth in 3 Years program is going to be $50 for the whole year up until the 9th. So you can sign up between now and the 9th. There'll be a link tomorrow. I'll get my team to make a link. I make these things cheap because I want everyone to jump in. You know, that's just kind of like how I think. But I want you to consider it this way. If you don't join and you don't want to look at all the alts and the different things that pump and really pay well, your goal in life, your goal behind is not financial advice. It's not financial advice. But if it was, but it's not. But if it was, your goal in life is to own at least one Bitcoin. Excuse me. And you can't afford it, I know. So dollar cost average. Create a plan. Dollar cost average. Create a plan. Like sacrifice, drinking over the weekends, chisanyama, whatever. Create a plan. And so you tell yourself the price of Bitcoin right now is just under 50K. Damn. Realistically speaking, the price of Bitcoin might be 70 to 100K by the end of the year. Triple, damn. How on earth am I going to buy one coin? The answer is not with that attitude, right? You got to start somewhere. You start putting in $10 a day. Maybe that's more realistic for you. I promise you, it'll become something after a year, after 2 years. You start to put $1,000 a month if your budget can allow it, but your dollar cost average. This is for those of you who don't want to join the Wealth in 3 Years program. For those of you who are going to join the Wealth in 3 Years program, what we do is we find assets that are so much cheaper than Bitcoin, cryptos under $1 that can 300x or 1000x to $10 to $100, because those baby movements make the most money. And then we take those profits and split them behind other bigger assets like Bitcoin and Ethereum in the long run, meaning it's far much more quicker to start earning a whole coin. Why do you want to do that? Because the next 10 years, or 8 now, the next 8 years, during the shifting and the changing of world order, those in now, aka early adopters, will be in such a sweet place 8 years from now. I want you to know this. There are two things that are true. If you don't change anything in your finances right now, nothing will change. This is true. This is true. If you don't learn more, if you don't educate yourself more, if you don't find a thing that will cause you to change, nothing will change. Number two, if you take a change now and you put consistent accumulative effort in that change, something is bound to change. It's physics. For every action, there's an equal reaction. You do nothing, you get nothing. You got to move on your finances. But what Ray Dalio is saying, and you should listen to him more than me, he's saying, look, man, the changing world order is happening and there's going to be a new top. And in the new top, there's going to be these big shifts. And I think it is almost a safe bet to look at cryptocurrencies, along the way. Right, guys, ladies and gentlemen, that is my time around all these things. Ray Dalio, I hope you guys did enjoy that. If you're still around, do like the video. I'd appreciate that. And I know if I end now, there'll be people throwing stones at me. So let's just quickly look at NFP tomorrow. Right. So on Wednesday, I wasn't looking at markets. I honestly don't know, what on earth is going on yesterday, Wednesday, but ADP dropped. And, I looked at ADP. I was like, really ADP, it's going to be neutral. Right. So neutral is basically they forecasted this number and they got that exact number. They got, when you forecast NFP and you say we expect 455,000 jobs, and guess what? We literally found 455,000 jobs. That's incredible, right? Either you're talking to, well, what's that black lady's name in the Matrix, the Oracle. Either you got a phone call to the Oracle and she told you this, or something. That's number one. But this is interesting. So ADP's forecast, and unfortunately, I'm really working on building this thing out for you guys, the course. So I have not yet a chance to read, the actual, ADP on the labor and ballistic statistics website. I'll read it tonight though. But yeah, so they met their forecast, right? So let's do some work here. ADP stuffs up sometimes, right? So let's not get that wrong, okay? And sometimes they get it right. But NFP tomorrow has a forecast of 492. So if ADP is correct, I'm just teaching you guys the logic, right? The logic. There's some things just need a little bit of logic. If ADP is correct, I'm not saying they're wrong, I'm not saying they're right, I'm saying this is hella dodgy. This is hella dodgy, and it's the second month a report looks dodgy to me. Right? But if ADP is correct and there are 4 or 5K jobs, then NFP is going to be negative tomorrow. Because remember, NFP focus is 492, and there's a big gap between the reality. All right, so that's already a problem for NFP. All right, but I don't care about the stuff because I haven't read the reports. I can't give you guys an educated what. So let's look at the charts. Let's look at the flow of money. I'm going to look at the dollar and Euro USD, and then if I have more thoughts around NFP, I'm running out of steam tonight. And maybe I'll brief you guys in the morning, right? So the dollar has done nothing except range outside this governing supply, and over time, really played to its small tiny assets. Also, there's that 1 hour demand, which was a gap in there, which we once spoke about a long time ago, and we bought that rally, closing that gap there. And markets are sitting on this, falling nicely from a governing demand. This is on the H4 time frame. We'll look at the daily time frame. Right, bearish engulfing pattern on the daily time frame. So this could look like a PCP. Depends how this candlestick ends today. And then if you look on the weekly time frame, you've just got a PCP of a bearish engulfing pattern making contact with the supply. This is the same supply where a month ago, late come, better wait for the definitely wait for the reload, my brother. Wait for the reload. Right. So check this out. Or you can just rewind right now. Remember, guys, it's been 4 weeks since markets have been. This is the weekly time frame. Look at this. Week 1 was the first week of March, which had NFP. And NFP was positive in March. Guys, come on, man. I'm just real slow. Really break this thing down. So on the 4th of March, NFP was hella positive. Their forecast was 407. We got 678 jobs. That's dope. Well done, NFP. But because of structure, supply, because of supply and demand, because of the supply at the top, that Friday, people lost money because the dollar actually spiked up just to fall because it made contact with the supply. So the right trade to take was a sell, even though NFP was positive, right? And since then, all markets have done on the weekly time frame is create a bearish engulfing pattern, retest the bearish engulfing pattern on the 3rd week, and then slowly but surely start to fall on this week. And Friday, tomorrow, starts a new financial quarter, number 1, but also a new month, right? So a whole new weekly candlestick could start down here going down. So for me, it's quite a tricky NFP because of this ADP scandal. But if we get a negative non-farm payroll thing here, or we get an ADP number, it's still negative because the focus is 492. Number one. Number two, there's no one, in my humble opinion, because my channel is so small and I see the people on the chats and I appreciate and I love all of you, and I say this with love. I know for a fact none of you are at that level yet to even bother predicting NFP in terms of your trading. So all you need to do, my brother, my sister, is to wait for the data. If other traders like trading 30 seconds before the news drops using ridiculous lot sizes, and last month they made money and the other month they blew the account, leave them alone. Let them make their money. Your job is to keep your eyes here. So what I would do is look at a chart like Euro USD, Pound USD are always my favorite to trade on NFP. Although, Friday is now, for me, I'm booked up for therapy in the afternoons. But yeah, trading news events has never really been the thing that motivates my life. I make the calls for you. So this is one day before NFP, right? What's this chart telling you? Euro USD. One day before NFP, right? Not really in the mood to make it all the way to a clean order block. You go a Kinhashi, you can't even see one. You go H4. There's definitely a supply there, right? Markets just keep playing mind games, right? So markets haven't reached it, and then today markets are going in for the dip. Is there enough time? Between today and tomorrow, 3 p.m. for markets to keep falling? Say there's a demand here during the Asian session, the London session, to make it all the way up there. Potentially, right? Potentially that's a possibility. But if markets get all the way up there, what's going to happen? Won't they fall? Potentially could fall, or they could break through it. But if NFP is positive, that is 49K2 plus, right? Dollar is going to be crazy strong. Dollar is crazy strong, and this is a good supply to start shooting down from. Although, because a news event, there will be liquidity rates, there will be spikes, there'll be, so wait for it. Let them break the supply when the news event comes out. But if they see the data, oh no, NFP is negative, therefore dollar is weak, they broke a supply, they want to go up in Euro USD. But if NFP is positive and dollar is strong and euro gets to the supply, maybe doesn't break it, or even if it breaks it, but shows you sign of going down, smaller time frames, bearish engulfing patterns on the 15 minutes, 1 hour, etc., then you look for a sell entry there and you keep it pushing, right? I mean, there's really not much to trade in news events than understanding the data in front of you, which means wait for the data. All right, so that's going to happen tomorrow, guys. Watch out. Why is NFP important? Not because everyone trades it, but because it's the Fed. It's the only thing the Fed is standing on right now. Powell told the whole world on the 16th of March, I'm not increasing the interest rate to 0.50 basis point right now because our job numbers are doing well. We got inflation under control. We only have 2 mandates, right? I'm trying to get his voice right, but I can't. We only have 2 mandates. Mandate number 1, employment. That's NFP is a test of faith in the Central Bank of America. If the unemployment numbers are trash, FOMC is doing a trash job, economy loses faith in the central bank, therefore fear, uncertainty, there's a big plunge. But if the job numbers keep doing well, which they have all year, by the way, is something interesting. If NFP is bad tomorrow, as is slightly suggested by ADP, then you can imagine there's going to be inflation fears, price out of control, commodity crisis, and now why are job numbers all of a sudden dropping? After Powell has reassured the markets over and over again, we're going to keep it at 3.5. They're already at 3.8. Right, so if the numbers are bad, the shock and the blow to the dollar is going to be interesting. And if you look at the dollar chart right now, guys, it is, I won't even lie, it's leaning towards, the downside, right? It is outside a big supply that we've highlighted many times. And now, I'm on a Kini-Hashi candlesticks here on the H4 time frame. If there is a break of market structure, if markets go below this level, Yes, there are other demands down there. But if markets go below this level, this is the first, tone that you kind of like be mindful of. Markets love doing weird stuff like that just before. So come back to this chart tomorrow during the London session. Between even 1 p.m. Wait 2-3 hours before, right? There's a supply test, there's a bullish engulfing pattern test right now, right? Come see where dollar stands and then take trades on Euro USD, Pound USD, and USD JPY for a hedge. Very nice trade ideas there, right? 365, I appreciate you. Thank you so much for watching. I hope you learned something. Let me know in the comment section. Remember, if you want a copy of Ray's book, I will buy it for you, but the rules are on the 365 page right now. I've uploaded that upgrade to the course thing. Share that, on your Facebook page or wherever. Send me a screenshot in the public Telegram group, and I'll send you a copy of the book. Shake my hand, everybody. Have a good night. I appreciate you. Thank you so much for sticking around, and all the best tomorrow. 365, man. Peace.